Hello, you are welcome to my channel once again. Those who are watching me for the first time, I have to introduce myself to you. My name is Daniel Amakun, an ACCA chartered accountant. I have provided accounting services such as bookkeeping and other accounting services for more than 20 years. I'm also an accounting teacher. Today, the subject that we are going to treat is trading profit and loss account. I have already done the trading profit and loss account. I've done a video on that particular one. So you can click on the link below to go and watch that particular video. So we are going to continue from there. So let us get into the video. So as I said, we have already done the first part, that is the trading account. So we continue from there. By the trading account, we arrive at the trading account by what? You take the total sales for the period. Then you take also the opening stock. The opening stock, you add purchases to it so that you get the total goods available for sale. Then the total goods available for sale, you deduct your closing stock from it so that you get cost of goods sold. After getting the cost of goods sold, then you deduct for sales from the sales so that you get what? You get your gross profit or loss. So the trading account is the first part, and it's simply you take the business normal trading activities, the buying and selling, so that you arrive at what? Your gross profit. So this is the second part. That's from your gross profit or loss. Then you continue to get your net profit. So we are continuing from there. As I said, the video is available, so you can click on the link below so that you can watch that particular. You can go and watch that particular video. I'm using these notes to explain the second part with the profit and loss account. This notes that I have made is very simple, and we go through gradually. By the end of the subject, by the end of the subject, you'll be able to understand the second aspect, which is the what? Arriving at the net profit. How do we arrive at the net profit? Simply, you take the gross profit, you add any other revenue to it, then you deduct all expenses. Then after deducting the expenses, you arrive at the net profit. So let us go through. So this is a profit and loss account. So that is after the trading account. The next is the profit and loss account. So let us go through. So far, we have dealt with only the trading account, as I've said. We now have to include the profit and loss account for our income statement to be completed. The gross profit is carried to the profit and loss account, and any revenue to the business, apart from the trading activities such as rent, commission received, is added to the gross profit to arrive at the total revenue. Then, any expenses incurred by the business, such as wages, electricity bill, carriage out costs, is deducted to arrive at the total net profit. This can be illustrated in the format as follows. As I've said, the trading profit and loss accounts, they are in two parts. The first part, you have to do the trading account. The trading account, take the normal business activity, the buying and selling, the purchase, buying and selling to arrive at what? The gross profit. And after you have arrived at the gross profit, any other income, here I've said the other rent commission received, and other, you add it to it. Then you get your total revenue. After getting your total revenue, you take all the expenses. Then you deduct it from your total revenue. Like you arrive at what? Your net profit. So that is good. This is your gross profit that you obtain from the trading activities. Then you add other revenue. Then you get your total revenue. You less expenses. Then you arrive at what? Your net profit. So let us look at an example. Example, MOA gross profit for the period is $150,000. It has the following transactions. Commission received $50,000. Rent received $30,000. Salaries, $20,000. Insurance, $10,000. Carriage out was $17,000. Sundry expenses, $25,000. Motor expenses, $12,000. Transportation, $15,000. And communication, $8,000. So this is the solution. This is the gross profit brought down, which is 150. I would say that's the gross profit brought down. Then you take other revenue. That's commission receive $50,000. This is the commission $50,000, and the rent receive $30,000. So the commission receive $50,000, the rent receive $30,000. $50,000 will be added to $30,000. It will be $80,000. Then you add it to the gross profit, which is $150,000, so that the total revenue will become $230,000. Then you deduct all expenses. Expenses are salaries, $20,000, insurance, $10,000, carriage out was $17,000, sundry expenses, $25,000, motor expense, $12,000, transportation, $15,000, and communication, $8,000. So that's the expenses. So we come here, that's the salary, $20,000, insurance, $10,000. So we total all the expenses, and the total expenses $107,000. Then you deduct it from the $230,000 with the total revenue. Then we get a net profit of $123,000. So in a nutshell, that's how you arrive at what? Your net profit. So it's the same explanation that I've given here. The gross profit, which is $150,000, is taken to the profit and loss account, and other revenue, $80,000. Well, from the $80,000 is commission received $50,000 plus rent received $30,000. So both of them is what? $80,000. It's added to it to increase the revenue to $180,000. So that's it. The gross profit is $150,000, and the commission $50,000. Rent received $30,000, making $80,000. We add it to $150,000. The total revenue is what? $230,000. So that's it. $230,000. And a final net profit, $123,000, being the outcome of the trading activity for the period. How did we get the $223,000 net profit? After obtaining a total revenue of $230,000, then we deduct all expenditure. Expenditure being $107,000 from the total revenue to $230,000. Then we arrive at $123,000 as what? As our net profit. So that's it, being the outcome of the trading activities for the period. This is brief introduction of the trading profit and loss account, though there are more adjustment to the trading profit and loss account. This will be considered in future. Yes, this first video of the trading profit and loss account is the first aspect of the trading profit and loss account. The other things that should be added, that in future I will do that particular video. So this one is just an introduction to the trading profit and loss account. Okay, now let's look at the case whereby you are giving a trial balance, and from the trial balance you have to pay a trading profit and loss account. So let us look at that particular. So a comprehensive example. From the trial balance of Nelson, prepare the trading profit and loss account at 31st May. So this is the trial balance. Please, I've made a video on the trial balance. So you can click on the link below to go and watch a particular video so that you know how to prepare a trial balance. Let us continue. So this is how we prepare a trial balance. The dates, the debits, and credits. And all the particulars are here. We have sales, $822,000. Purchases, $50,000. Opening stock, the stock at 1st May, that's the opening stock, $20,000. Carriage inwards, $10,000. Carriage outwards, $15,000. Return inwards, $6,000. Return outwards, $8,000. Commission received, $25,000. Rent paid, $20,000. Motor expenses, $16,000. Commission paid, $14,000. Light and heat, $20,000. Rent received, $10,000. Salaries, $135,000. Rates, $5,000. Insurance, $75,000. Medical bills, $22,000. And communication expenses, $5,000. Then general expenses, $2,000. So the trial balance, when you add up, the debit side is $865,000, and the credit side which is $865,000. Let me briefly explain the trial balance. The trial balance is just a list of balances. How do we prepare the trial balance? You take at the end of the period, either at the end of the month or at the end of the year, you close all your ledgers. Then you take all the entries. When you take all the entries, all those that are debits, you group all at one side. That's what I've done here. All debits at one side, then all credits is at one side. So at the end of the day, all credit should be total up and all the debit should be total up. So you should agree. If your trial balance at the end of the day, after you close your books and you check your trial balance, it does not agree, then you made a mistake. You have to go and correct it before you can continue to prepare your trading profit and loss. Otherwise, your balance, your final balance sheet will not balance. Okay. So this is our trial balance that we have. We are going to use the trial balance to prepare a trading profit and loss account. And underneath the trial balance, we have a stock at 31st May, $70,000. Okay. Now the solution. This is the format that we use to prepare the trading profit and loss account. Please go and watch the first video on trading profit and loss account. I've explained the format and so forth, but this the format looks like trading profit and loss account format. You have your sales. Then you less return outwards. What's return? You less return inwards. What is return inwards? A company may sold goods to a customer. But if some of the goods are damaged or wrong goods are supplied, then the customer will return the goods. They return the goods back to the company. So if you want to know your actual sales, then is the sales that you made to the customer less any return that the customer has made. Any goods that the customer has made, we call it return, or that you deduct it from your sales in order to arrive at what your net sales. Then you take your opening stock. You have your purchases. You add carriage inwards. What's carriage inwards? A company may go and purchase an item, and when they purchase an item, they will pay for transportation. So if you want to know the actual cost of the goods, you take the purchases, then you add the transportation to it. The transportation is what we call carriage inwards. So that's the carriage inwards. So you take your purchase, you add your carriage inwards to it. So in order to know your total purchase, then you less return outwards. The probability of the company also buying goods and realizing that some of the goods are damaged or wrong goods has been supplied is possible. So when the company realize that some of the goods purchased are the wrong type of goods, they have to return. We say return it after because they return it back to where they bought it from. So that is from what your total purchases. Then you get this figure. Then you take your opening stock, then you add it to this figure. So when you take your opening stock and you add it to this figure, you arrive at what your total goods available for sale. Then after you arrive at your goods available for sale, then you deduct your closing stock. The closing stock is the goods remaining at the end of the trading period. You deduct it from it. So that when you deduct it, you get your cost of goods sold, which is this particular one. Then you take your net revenue, you deduct your cost of goods sold from, then you arrive at what? Your gross profit. So this is the first part of the trading profit and loss account. You finish with the trading activities, about net profit. Then you have other revenue, you add it to it. So that your total revenue will be this, which will be the gross profit plus any other revenue. You arrive at this figure. And when you arrive at this figure, which is the total revenue, then you less all expenses from it so that you arrive at what? Your net profit. Okay. So let us go to, so from our trial balance, we have our sales figure of what? $822,000. Then we added what? Return inwards of what? $6,000. So let us look at it. And go to the trial balance. This is the sales, $822,000. That is the return inwards, $6,000. Okay. Then you take your opening stock, $20,000. So when we come here, this is our opening stock, $20,000. Then your purchases, which is $500,000. You add carriage inwards to it, $10,000. What's the carriage inwards? As I said, carriage inwards is what? Extra expenditure that the company has to pay for before bringing the goods to their warehouse or their premises. You add it to your purchase in order to know what your total purchase, and it is here. You have your purchases $500,000. You add your carriage inwards $10,000. So $500,000 plus the carriage was $10,000. We get $510,000. Then any return inwards, any less return outwards, $8,000. So here's the return outwards, $8,000. So this amount $510,000 with the total purchases. Then you deduct the return at was $8,000. You get $502,000. What is the return at was? That's why I say that a company, the probability of the company also buying goods and rather some of the goods are damaged, and they have to send it back to where they bought it from. It is what we call return at was. They are returning back to wherever they bought the items. They return out. So you deduct it from, then you get this figure. Then you take your opening stock, which is $20,000. Then you add this figure, total figure to it. Then you get what? You take this opening stock, $20,000. Then you add $502,000 to it. So you get $522,000, which is what the goods available for sale. Then you have to less the closing stock, $70,000. So this is the closing stock, $70,000. What is the closing stock? The closing stock is the goods remaining at the end of the trading period. So that is the closing stock, $70,000. So you have goods available for say $522,000. That's closing stock, $70,000. And we get our cost of goods sold of what? $452,000. We take our net is $816,000. We deduct our cost of goods sold, $452,000. Then we have a gross profit of $364,000. Then we take our other revenue. We have commission received, $25,000. Rent received, $10,000. So when you go to the trial balance, we have commission received, $25,000, and rent received, $10,000. Extra income that has been made. So that's it. We get the rent received, $25,000. The commission received $25,000. The rent received $10,000. Both of them will be what? $35,000. They add it to our net sales, $364,000. So this plus this, we get our total revenue of $399,000. Then we deduct all expenses, and these are the expenses. Rent paid, $20,000. Motor expenses, $16,000. Commission paid, $14,000. Light and heat, $20,000. Salaries, $135,000. Rates, $5,000. Insurance, $75,000. Medical bills, $22,000. Communication expenses, $5,000. And general expenses, $2,000. So we sum all up. So here is it. Carriage invoice and so forth. So we add up all the expenses. Add up all the expenses, and we arrive at what? $314,000. Then we deduct it from our total revenue of $399,000. So the net profit of $85,000 has been made. Let me go over the process again. You take your sales, $822,000, then return invoice. You sold the goods to the customer, they return some of the goods. You deduct it from your sales so that you get what? Your net sales of $816,000. You have your opening stock. You take your purchases, $500,000. You deduct carriage invoice. I go over again. You take your purchases, $500,000. Then you add your carriage invoice, $10,000. What's the carriage invoice? The company, they buy goods and they pay for transportation. So that's the carriage invoice. You add it to your purchase in order to know your total purchases, which is what? $510,000. Yeah, and you deduct any return outwards, what the return outwards. They buy the goods and realize some of the goods are damaged, so you have to return it. So you deduct it from your total what purchases. So when you do that, you get $502,000. Then you add your opening stock of $20,000 to it. Then you get your goods available for sale of $522,000. Then the closing stock remaining at the end of the period, you deduct it from it. So $522,000, that's the goods available for sale. Minus the closing stock of $70,000. You have cost of goods sold of $452,000. You take your net revenue, $816,000. You deduct your cost of goods sold, $452,000. Then you arrive at your gross profit, $364,000. Then any other revenue, here we have commission received $25,000 and rent received $10,000. You add both, $35,000. Then you add it to your gross profit, $364,000. You arrive at a total revenue of $399,000. Then you take all expenses. So all these are all the expenses. You sum all up. You sum all the expenses up. It's $314,000. You deduct it from your total revenue, $399,000. Then you arrive at your net profit of what? $85,000. So that's what I've explained here. The net sales of $816,000 is obtained by deducting the return invoice of $6,000 from the sales of $822,000. As I explained, the sales $822,000 minus the return $6,000. The return was $6,000, so that we arrive at what? $816,000. The purchases of $500,000 has been increased to $510,000 by adding what? The carriage invoice of $10,000. So it's this $500,000 purchases plus $10,000 of what return invoice. We get a total figure of $510,000. This is also reduced by return outwards of $8,000. They return the goods, some of the goods. So it's $510,000 minus the return outwards of $8,000. Then the actual sales becomes $502,000, which is added to the opening stock of $20,000. So the total purchases of $502,000 is added to the opening stock of what? $20,000. The outcome is good available for sale of what? $522,000. Then the closing stock of $70,000 is then deducted. We have this goods available for sale, $522,000 less $70,000 of what closing stock, and the cost of goods sold of $452,000 are obtained. So when you get your cost of goods, finally the cost of goods sold, that's $452,000, is deducted from the net sales. The net sales $816,000, which is the net sales $816,000 less cost of goods sold of $452,000 and a gross profit of $364,000 is the outcome of the trading activity for the period. The gross profit, which is $364,000, is then taken to the profit and loss account and other revenue, $35,000. How do we get other revenue? Is commission received $25,000 plus rent received $10,000, making $35,000 is added. It's added to it to increase total revenue to what? $399,000. Then the total expense is $314,000 is deducted from the total revenue of $399,000 and a final net profit of what? $85,000 being the outcome of the trading activities for the period. So that's the end of the video. Please Practice make man one perfect. As the saying goes, practice make you perfect. Go over, you can record this video, go over several times. Accounting is a principle. The more you go over it, the more you become familiar with it, the more what you understand it better. So go over this particular video several times. And please, if you are an accountant and you cannot prepare trading profit and loss account, you can even be a chartered accountant. Any organization that employs you plus you will definitely sack you, because trading profit and loss account, it's one of the most important subjects in accounting, because every business person at the end of the day, whether at the end of the month or at the end of the year, they want to know what whether they made profit or loss, because the main purpose of establishing the business is to make profit. So normally the profit is calculated either at the end of the month in order to assess the performance during that month, or at the end of the year, so they assess the total performance of the business for the whole year, so that they have to know their profit, whether they are making profit or not, so that if there's any corrective measures to be implemented, because maybe they are not making profit, then they can do it. So if they employ you and you can't prepare trading profit and loss accounts, including the balance sheet, which later on I will also do a video on it. If you can't do it, then no organization will employ you. You have your certificate, but you can't get a job. So go over this particular video several times so that you master the subject, so that you find it very easy to prepare the trading profit and loss account. This is the initial introduction. I will do other videos on the trading profit, but this initial, you have to ensure that you have really understand. So let us go over what we've learned so far. So our learning outcomes are what? You can now prepare trading profit and trading account so as to calculate what? Your gross profit. That is the first part of the trading profit and loss account. You have to what? The trading activities. You have to find out whether they are making profit or loss. So the first step is what? You take all the trading activities, and you will be able to derive what? Your gross profit. That's the first step. Then you go on. You now know how to prepare profit and loss account so as to calculate your net profit. So after getting the gross profit for the trading activity, then you deduct all expenses so that you arrive at what? Your net profit. Please work more questions. The more you work questions, the more you understand it better, the more it becomes very easy to you. If you need more questions, you can contact me by my email below so that I can give you more questions. And as I said, I'm a chartered accountant. So if you want somebody to keep your books for you or provide other accounting services, please, you can contact me. And also, if you need somebody to teach you accounting, you can also contact me by my email link below. And one more thing that I want you to do for me before you go away is please like and also share this particular video to your friends. Also, comment on it so that any mistake that I've made, I will be able to correct myself so that I can make better videos. And lastly, please do subscribe, because every week I'm going to make videos on various accounting topics so that when you subscribe, it can be forwarded to you. So watch out for my next video. Bye till I see you again.